Hey, this is Matt from InvestiQuant. Today is Wednesday, March 3rd, 2021. This morning we saw the markets open pretty quietly, down just a little bit, but since then we have started pushing lower. So we gapped down and we pushed lower shortly after the open. We're currently trading down near the lows of the session as well. So we've got down days forming after this morning's down gap in the S&P and in the NASDAQ, which are these two charts on the left. The price action is a little bit different there in the Russell, which is the top right chart, and the bottom right chart, which is the Dow, which has been a bit stronger today. But as far as the NASDAQ and the S&P go, it has been a bit weaker so far today. So what I want to do this afternoon is take a look at that type of action as we head into the close. We'll look at it in all four instruments, even though it's really only applicable right now to the S&P and the NASDAQ. What we're going to be looking at is entering the market long at 3 p.m. Eastern Time and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. And the pattern that we're going to be looking at specifically is based upon opening lower on the session. So that's called a gap down, and you can find that in the opening filters direction. In the opening filters library under gap direction and gap down. Then I'm going to go into the post-open filters section, and I'm going to describe the price action that we have seen so far today, where we've got this red candlestick forming, where the open is in the top portion of the range and you're trading in the bottom portion of the range as you head into the close. So to do that, I'm going to go to this open versus intraday range, and I'm going to say that the open of the session is in the top half of the intraday range, and that intraday range is measured between 9:30 a.m. Eastern Time and the time of entry, which I've got set to 3 p.m. Eastern Time. So within that range, the open is in the top half of the range, and the 3 p.m. price is in the bottom half of the intraday range. So I'm going to go to this intraday close versus intraday range and hit equals next to close in the bottom half of the intraday range. I don't know if that's going to be true or not for sure, but currently we are trading in the bottom half of the intraday range, and this will be based upon if you are trading there at the time of entry, which is 3 p.m. Eastern Time. And then lastly, I'm going to go into the indicator section and put us in a similar market environment. And that market environment would be below a 10-day simple moving average, but above a 200-day simple moving average. And now I can hit view results. And here we go. Here are the results of going long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you gap down. And after the gap down, the open is in the top half of the range. The 3 p.m. price is in the bottom half of the range. And this has taken place in a similar market environment, which I have as below a 10-day simple moving average, but above a 200-day simple moving average. Now, historically, this pattern has happened fairly frequently. It's a pretty common occurrence here with the simple price action that we're seeing. And the S&P has 151 samples, the NASDAQ 162, the Dow 158, and the Russell 136. If we look at the win rates on them, they're all just a little bit under 50%. S&P 48%, NASDAQ 48%, Dow 49%, and the Russell the weakest at 42%. But what is more noticeable here is the average loss on these is larger than the average win on all of them. So for the S&P, average loss is larger than the average win. That is true for the NASDAQ, that is true for the Dow, and that is true for the Russell. So the win rates here are not really showing a strong directional edge. However, the risk has still been to the downside with this pattern, the larger moves taking place to the downside, historically speaking, when this pattern is in play. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.